And the Nasdaq reporting earnings itself this morning. The company earning 76 cents a share. It's a penny better than estimates. Revenue coming in at $1.23 billion. That's in line with expectations. Joining us right now is Adena Friedman, Nasdaq chair and CEO. The stock moving marginally higher, but it's a good report, pretty much across the board. You did telegraph that this is what was going to happen, though, so people aren't like going, they're not throwing parties just right now.
Yeah, well, we're really
But you're throwing a party.
Really pleased with the results for the year. And when we think about it, we had 9% growth for the year, 10% growth for the quarter, and it's really been a transformative year for Nasdaq. We had a significant integration of Adena.
Right.
We've created this new fintech division where we have very deep relationships with the financial industry today to help them solve their biggest risk challenges, to drive capital markets infrastructure into the future. And it's showing up in terms of how we've engaged with our clients and the results. In addition to the fact that we also have great performance in our index business. We had 31% growth in that business. We reached new records in our trading business. 12% growth in the quarter, 4% growth for the year. So overall, every element of Nasdaq, it feels great, and we're growing and we're delivering. And I'm really,
I was going to say, though, the
team.
financial crime management technology part is just like flying.
Yeah, so we had, again, 22% growth in our financial technology business, our financial crime management business. And that has been, we had a new tier one that signed up with us in the quarter. So we're continuing to really grow and expand that business in really cool ways. We've announced that we're going into Europe with that business now, because we're really only in North America today. We have 2,600 clients in North America, but we're now taking that into Europe. And
how many other kinds of businesses like that? When you think of, you bolted on a whole bunch of stuff, basically leveraging the relationships that Nasdaq has with so much of not just corporate America, but the rest of the world. How many other kinds of businesses as a platform now do you think you can layer on top of Nasdaq that are either adjacent over time?
Well, first, I think we have an incredible, powerful platform today. So we're really focused on how do we solve the bank's biggest risk challenges. So risk management, regulatory reporting, which sounds boring, but actually very interesting, and then anti-financial crime. How do we drive markets into the future with capital markets technology that works in a modern technology framework? And then how do we help corporates manage their lives as public companies more successfully, drive investors to make smarter asset allocation decisions? So in the spectrum of what we have a lot of growth vectors, and we're obviously showing growth across our platform. I think we are a platform company. We want to make sure that we're delivering that in a way that's very consistent. And over time, we'll continue to find new avenues for growth. But right now, we feel great about the growth profile that we have.
Are you, because of that focus, implicitly long regulatory buildup and complexity?
So it's a great question. And actually, no. Because first of all, we believe that a more efficient and effective financial system will drive more liquidity across the markets, into our own markets, into markets around the world. We are a provider of technology to 130 markets around the world. So the more that we can drive liquidity across the world, the better our clients do, the more that they're going to modernize their technology, and the more that they're going to partner with us. So, and then banks, if they can grow, instead of having to deal with regulation, which we provide great regulatory technology around it, we basically, I think it's something like 1,000 new rules that we have to integrate into our solution every year. It's a lot.
Yeah.
But if they can actually keep more of that capital and drive more earnings, they'll grow more. So they'll go into new asset classes, new geographies. They'll need risk management technology to support that, and we can provide that too. So we look at it as we can be a great partner to them in all environments.
How is your listings pipeline looking? And I ask because we had the Smithfield Foods debut yesterday, which was kind of muted, downsized IPO following the Venture Global IPO last week on a different exchange. But it's kind of same story of a downsized IPO that traded, somewhat modestly in their debut. What are you hearing from prospective listing clients about this revival? Because the first two big deals out of the gate haven't necessarily overwhelmed the buy side.
Well, first of all, every IPO is its own story. And so the buy side is going to make a determination of every single company that they evaluate. But the general theme is that investors finally feel like the general economic environment is a little bit more noble. We have continued resilience in the economy, continued growth, a more normalized inflation environment, and a more normalized interest rate environment. So they're ready to put capital to work. And we've had a lot more companies getting prepared for the public markets with very concrete plans. As opposed to, well, we might go out next year. It's more like, yep, we're thinking about April, we're thinking about June. And so I have to say, it feels very good. It feels like we should have a good year and a very strong year for IPOs this year, as long as the economy stays resilient. So I wouldn't look at 2 IPOs and say that that's like portends for the
trend.
entire year. Yeah.
Can we persuade you to weigh in on the AI story of the moment, which is you've been playing around with, I think, Anthropic and OpenAI and some other things like that. But does this change the whole dynamic in terms of how you're thinking about open source models versus closed? Like, how is Nasdaq actually doing this?
Yeah, no, actually, the way that we work is that we work with the cloud providers to, especially those where we have our solutions already in cloud. So all of our software solutions are in AWS or Google or Microsoft. So we work with them.